The Fed bailouts are ongoing, massive, and pervasive. We now have more details surrounding who exactly they're bailing out and the facts and figures behind it. It would seem quite obvious that the biggest companies get the bailouts directly by buying their debt, and more indirectly by purchasing corporate bond ETFs, under the guise of supporting the function of the markets and ensuring the stability of the financial system. The Fed has found themselves a perfect excuse to quickly lay siege upon the system and buy just about everything. And what a genius plan. The market players are cheering them on. The private, technocratic, elite banking families thank you for your obedience. You came here for the truth, so let me unveil that for you. My goodness, I have an interesting video. I posted about this on my blog section of the channel. I'm talking about this here in this video. I had another video prepared actually, but this one is coming first because it is so crucial. It is so important. Not often do we get details directly from the Federal Reserve that highlight their exact operations. This is what we're talking about. When we look at their different operations, we see that they have made statements, but we need the details. We need the nitty-gritty. Now, we don't know what's really going on. I'm sure there's a lot more that they won't tell us, but at least we have this broken down in these Excel spreadsheets that I will show you in just a second. I'm going to give you all the sources. Everything I mentioned here will be in the link under the description of this video, where the section that says sources, it's all there. Now, I'm going to give you the basic breakdown of where the Fed is at today. Then we're going to look at the Excel spreadsheets. I will move through this very quickly. We're looking at the federal funds rate. As you can see, this is the interest rate of the Federal Reserve. Currently, for all intents and purposes, it's at 0%. They were inching this up very slowly over the last couple years. Then we hit a peak, not even hitting 2.5%. Quite embarrassingly, it is disgusting, in fact. Then they brought this down, as you can see on the chart here, right to the ground. The expectation is that they will go into the negative. We'll see about that. I'm going to track it here. But this has created a very easy money policy that has been really pervasive all around the world. You look at it just about everywhere. It's near zero or at historic lows. They were telling us that they're near neutral, quote unquote. They were telling us how everything was just fine, the economy was doing well, and yet the interest rates could not go to 2.5%. The market broke down in September of 2019. People need to understand this. They told us that everything was okay, but in fact, the financial system completely fell apart during the repo operations. That's when it started to coming into the light. It started to actually make itself known. But what happened afterwards was that we found a nice excuse in order to pump money into the system like never before. But it's not the way that it's perceived to the average person. It's not as if they pump money in and the rich get it. No. This is not the way it works. See, they are actually buying it themselves, and they want it because of these elite banking families that are connected, that are the shareholders, or that are the indirect recipients that are benefiting from this. We need to look at the details as they really are. There's so much more going on here than you're going to get in some Bloomberg article. We have to piece everything together because it is one heck of a puzzle. Two things I want to show you on this chart. You're looking at the Fed's balance sheet, which of course, as I have highlighted, and I'm sure you've seen it other places, over $7 trillion right now. You could see that it has grown tremendously. However, in the past 2 weeks, at least at the time of this recording, the balance sheet has fallen down just a little bit. I'll show you the breakdown in a second, but I wanted to note one other thing. Do you see this shaded area in here? That's a recession. The Federal Reserve is actually putting this here, but the thing that's funny to me is that they made it seem as if it's over. Well, maybe we don't see eye to eye because that isn't the case. I don't know if anybody else noticed this, but this is new to me at least, seeing the shaded area. I think they might have to go and revise this at a later date, but we'll see how much money they intend on pumping into the system. Going in a little deeper, we're looking at the Treasury securities here, and you could see that over the past 2 weeks, this had increased. In the previous video I had done, I didn't show you on this level. I'm just giving you a quick update, as you can see with the Treasury securities, and it also applies to the mortgage-backed securities, same thing. They have increased their purchases, as they say they will, $120 billion per month being pumped into these two things alone. In addition to that, they have all their other programs. So I just wanted to highlight what they've been doing. This has been something that's going on for a while. I don't understand how you can say that you're trying to help out Main Street and yet you're buying mortgage-backed securities, the worst garbage you can find. The same things that were a problem over a decade ago, and they're still bailing it out. It's a joke, but people take it. They don't really care. They don't really know what's going on. Now I'll give you even more detail. Directly from the federalreserve.gov website, you can see the H41, and this gives you a full breakdown, all the analysis you need to know. When we look at the numbers, you can see that this is each and every step. So you're going to be able to see the primary credit, secondary credit, primary dealer credit facility, and you just go on, and it shows you all of that on here, and you can see the totals as they are giving you a breakdown of the numbers. All right, that's enough introduction. I needed to show you that because it sets the stage for what I'm about to show you next. I'm going to look at a Bloomberg article that breaks it down in simple terms, but then I'm going to show you the Excel spreadsheets as well. Fed reveals bond purchases, including AT&T, United Health, and Walmart. The Federal Reserve bought bonds issued by companies including AT&T, United Health, Walmart as part of its emergency lending program in response to the conditions that we are seeing in 2020. These details here are located in the article, but of course, as I said, you can also get them in the sources of this video. On June 16th, the U.S. Central Bank began purchasing securities of individual issuers as part of a broad index it created to include companies that were eligible for the program. The eligibility and so on, those are all detailed there, but pretty much anyone but you and me is on that list. The disclosures posted on Sunday showed that of the $207 million of purchases made on the first day of buying, about 21% were of debt issued by firms in the consumer non-cyclical sector, 15% consumer, 10% technology. I'll show you that as well. In a separate disclosure, the New York Fed released the composition of the broad index the central bank is using to conduct the purchases. So I have that to show you, and it just gives you a breakdown of what ETFs they're buying. So many people have basically just jumped on the bandwagon. Whatever it is that the Federal Reserve is buying, they're also buying. The belief is that they have put a floor here in how far they will allow it to fall, so there is no risk. That's essentially what the investors and their mentality right now is, that you can't lose, there is no risk, the moral hazard is there, but who cares? I gotta make money. So there is no proper market pricing today, right now in 2020. The Federal Reserve has created that more than we have ever seen before. But of course, all the central banks around the world are doing the same thing. So here's the page that you want to check out, and you could see it is directly from the federalreserve.gov website. It gives you each of their different facilities broken down by date, and then you can just click on the word PDF and it will open up the PDF for you and you could see everything. If you scroll down here, you're going to see one that talks about the transaction level, and that's what I'm going to show you now. So this is the first one here, and what you're looking at is from May 19th, and this was before the individual purchases. So you're going to see the breakdown of the numbers, everything they've been getting into, trade level. You could see it here on the left-hand side, the ETF sponsor. We've got the names that you knew were coming up, and that is Vanguard, BlackRock, State Street. Deutsche Bank, our friends, are on here as well. There's a full list. The tickers are in here for you. You got the fund names as well. The tracking number, if you see that CUSIP number, this is the exact tracking number. It's all here. Everything else is on here, the total values, everything you need to know. I'm not going to, of course, scroll through and read everything out to you, but you can see it here if you are interested. These are the ones that people were interested in primarily, and this is the ETF summary. The one at the top of the list, which I believe I showed you the exact one previously, the Fallen Angel High Yield Bond ETF. Now imagine this. We've been talking about the problems with the corporate sector debt. We had so many issues with what's happening. They're expanding too fast. There's too much of it. It's too crazy. It's fallen off a cliff. They're going to be downgraded. And as a result, the funds are going to have to sell off. There's going to be a cascading event. This is huge. And what does the Federal Reserve do? They buy them all up. So there's even an ETF that's based around that. Now we'll see what happens with the performance of it. But investors right now are thinking, hey, I can't lose. I could buy anything at all. I can't lose. Anyway, here are the list of names if you're interested. Let's move on to the next one. All right, now I don't know how long I've been recording so far, but I know this is what you came for. This is it. This is what you need. Left-hand side, you're looking at the issuer. This list is showing me AT&T. We're looking at Activision Blizzard. You can see Boeing is in here. Caterpillar's in here. Chevron, Coca-Cola, and by the way, Pepsi, I guess they don't have a favorite. Ford is in here. General Motors is in here. PayPal is here. Walmart is here. And our good friend Berkshire Hathaway. That's right. These are all in this list. Again, you get everything you need to know, all the details listed right here. If you go over to the next tab, Sector Summary Bond, it just breaks down where they are putting the money exactly in terms of the sectors. You can go through the different ratings. I found it interesting that they've been doing more of the purchases in terms of the broad market index when you look at the BBBs specifically. And of course, the market is not going to buy them, so they have to be the lender of last resort. If we move over to the next one, you're looking at the trade level bond, as it says here, and you get those names. This is the list right here. You could move down and through it. You're noticing all of the names I mentioned previously. Of course, we have Walmart. Of course, we have Ford, and so on. One of the names that I wanted to highlight was Microsoft. You can see it line 74. They're part of this as well. I looked for other tech names such as Amazon and Apple and so on. I didn't see it. I took a quick look through. If you do find some other interesting names, of course, post those in the comments below. There's a lot of them. And this is only the beginning. That's what I want people to understand. We have just begun. They're going to go further. They're going to go deeper. They are going to make a mess of this financial system. It is crazy, but hey, that's what's happening today. You can go in further and see what they have done. You could look at all of the details. As I said in the previous one, Fallen Angels, all the different BlackRock and Vanguard ETFs that everybody has now been dumping their money into. It's all here. I'm not going to go on any further. You know where I'm going with this. This has been something that is truly unbelievable to see it happen. Links are in the description if you need them, but I'm going to keep you updated on this as best I can. And I wanted to finish with this. We are looking at something that is truly today, right now, 2020, unprecedented. It's historic. And the actions that these central bankers are taking, they tell you that this is for Main Street. They even created a program and they put the words Main Street in there. But in these ETFs, you've got foreign corporations. The Federal Reserve is buying these ETFs and they are supporting the foreign corporations as well because they're all lumped together. This can't happen. They're bailing out the biggest of the big companies here. They're bailing out Walmart. They're bailing out Berkshire Hathaway. And they're doing so telling you they're trying to help liquidity so that Main Street can operate, so that people can get loans. People are unemployed. Tent cities are expanding. You've got people living in their vehicles at an alarming rate. And the Federal Reserve, we're talking about the multi-millionaires, the ones who are benefiting from the situation because their puppet masters that sit above them are going to own and control everything. So they throw them a couple bucks here and there. They're first to get it, so they're first to benefit. And by the time it makes it down to the masses, there's nothing left. That's a complicated subject that's very difficult to get into. I think it is appropriate that we look at this on a deeper level and understand what happens when they print money. They create a divide in between the rich and the poor, the have and the have-nots. And when you look at this chart here, it shows us something very interesting. I'm just really using it as a prop, but rich countries tend to have a bigger middle class, except the United States. United States here, if I pull up the highlighter just to show you, it just gives you an idea of what we're looking at. This is the USA, and you could see that on the bottom here, we're looking at the median income. Here is the middle income share percentage to give you a comparison, Norway, Luxembourg. This just shows you what these different countries look like, but I want to highlight what the central banks are doing and their activities and how messed up this really is. The world right now today will never look the same because of the actions that are being taken today. And as I said during the introduction, they're being cheered on, and that is a very, very scary thing. That's all for this video. If you found it informative, hit that thumbs up button. If you support me, hit the thumbs up. If you hate me, hit the thumbs down. Have an opinion. If you want to check me out on Instagram and Twitter, I'm doing stuff on there every single day. You can check me out at The Money GPS. Do you want to learn how to sell stuff online? You want to make money with e-commerce? I have a free, that's right, 100% free e-course, the AmazonGPS.com. Do you want to know what's going on in the financial system? You want to be able to understand the central banks, interest rates, money printing, the 4 assets. All those details are located in these 2 books, and you can get them at the link in the description. If you want the audiobook instead, themoneygps.com. Wait a second, don't go anywhere. You've got to see this video. There's a lot of detail in it. You should definitely check it out. Click it. I will see you there.